So when a trend is taking place, how do you apply a Fibonacci towards it? So what's a Fibonacci and what do you use it for, right? So first things first, a Fibonacci is a tool that you're going to use to identify support and resistance. And based off that support and resistance, you're going to get different areas of retracement. Based off those areas and the numbers that it gives you when you draw out your Fibonacci, right, it would give you a new opportunity to capitalize on the ongoing trend and on the new movement that trend is going to create, either plummeting upwards if we're talking about an uptrend, or coming down and starting a new trend or a new form in direction. So what's up, guys? Basically jumping straight into TradeView to explain to you guys how this tool works with an ongoing trend, right? So basically, like I said previously, it's used to identify support and resistance. And like I said, I'll be showing you how to use it on an ongoing trend, as well as what levels to look for on that ongoing trend from the retracement levels it will present to you. So first things first, when looking for a Fibonacci, you will go to your left-hand corner right here, press this little arrow, and then scroll down over here to Fib retracement. And then if we draw it out, right, just for example, and then I'll make it a little bit thicker so you guys can see the lines. You're going to have, let's put it right over here in the middle of the chart, so it's a lot better. Cool, there it looks a lot better. So basically right here you have a Fibonacci. Mine looks a little different than yours. You could go here and basically change the background color, right, and put it all white, and it will look just like mine does. So a Fibonacci is used to identify support and resistance based off the retracement levels it has, right? So first things first, the best retracement levels, in my opinion, to look for are 38 to 50, due to the fact that that's going to indicate a strong trend. When you get to 50 to 61 is like an okay midterm trend that you could still capitalize on it. From 61 to 78, it's kind of a riskier trade, and you would, you know, if you are going to trade it based off this retracing of 61 to 78, I would highly recommend using other indications, or using Forex patterns, or using an another form of a idea as into like justify why you're going to go into this trade, right? Every trade you want to go into has to be a high probability trade. If it's not going to be a high probability trade, you shouldn't probably be trading whatever you're trading. So I'm going to delete this. And there's two ways that you could draw this out. You could draw it from low to high, or from high to low, right? So if the trend is going upwards, you would draw it from low to high. If the trend is going downwards, you are going to draw it from high to low. All right, let me press on it here for you guys. So when the trend is going upwards, draw it from low to high. When it's coming downwards, draw it from high to low. Right, so now that you guys understand how that works, we'll delete this and jump straight into a chart. We're looking at Great British Pound, Australian dollar, and this could be used for a lot of different time frames, right? So if you're a swing trader, you could use this. If you're a day trader, you could use this. If you are a scalper, you could use this. I use this mostly for scalping when I'm looking at a indice, but right now I'm going to show you how you would use it, for a 30-minute chart to 1 hour chart. So first things first, you would grab your Fibonacci tool, and we could clearly see the market's coming downwards. If you guys want to use something to really show you where the market's going, just put in moving average. Just put in a moving average right here, and then put it at a level of, you can put it 25, 50. We'll use 50, right? So basically wherever the Fibonacci is going to is wherever the trend is going. So if it's going up, it's an uptrend. If it's coming down, it's a downtrend. Very simple thing to use to indicate where the trend's going. So we're just going to leave that line there. We'll draw it black so it could look better on our chart. And now I'm going to jump straight into how you would use a Fibonacci on an ongoing trend. So trend is coming down, right? From this consolidation, this little area of consolidation, which we'll use this to mark it out. From that area of consolidation, market broke downwards. And from the market breaking downwards, right, and coming up to this point, you're basically going to draw Fibonacci not from this high, from this high to this low, right? And based off drawing it there, you'll see that the market retraced off 0.38. So this right here, this retracement level, as I indicated, is a very strong, it's indicating it's going to be a very strong trend. So how would you enter this trade? You wouldn't just enter it because it retraces off this level. You want to await more confirmation. So before you enter it, just on it hitting this level, you want to wait for some red candles to start forming to then enter, because that will give you like a solid confirmation of the market starting to move downwards, right? So another example that you could use this for is right here. You will draw it from, basically, if we scroll backwards, you would draw it from this point to this point, right? And you would see, again, market retraces off the 0.38 level, which is a strong level, and then breaks downwards, right? Unfortunately, it met this area of support, and then that caused the market to stop its ongoing movement towards the downside. So with consolidation forming, and this starting a new uptrend, right, even though it's indicating that it's going to start to come down, you would use it from this point, from this low to this high, right? And as you can see, if we zoom in, make the chart like this, as you can see, when we zoom in, it's retracing off the 50 to 61 zone. So based off this retracement, it's indicating it's a mild type of trend, that it's not the strongest, but yet it's not the weakest. As soon as you see a crossing of a moving average, which you'll pretty much see it right here, as soon as it starts crossing, starts to get to the middle, and you see this retracement, as well as you see this high almost past this previous, you see this high past this previous lower high, you could, take a decision or analyze that the market's going to start a new uptrend, right? This is why Forex patterns and Forex market movement is so important. So from here, you would trade it and it would go upwards, then it would meet this area right up here, and then it would break downwards. Now, how would you know from here it's not going to continue to go upwards, right? If we were to draw it from here to here, right? We'll delete this one so we can see the screen better. I'm always talking about, hey, the market's going to retrace off this zone or a higher zone, right? First things first, you would not just enter this because it's retracing off this zone. You would enter it after it's formed a couple of blue candles that indicate that the market's going to continue to move in that direction, as well as when you're using a Fibonacci, other indicators that you use to assist it are the preferred way to go due to the fact that they give you more confirmations. All right, so you would enter a trade once you see the candles forming in the direction that you want the trade to go to. Now, here's the good thing about this. Let's say you draw your Fibonacci and it doesn't retrace, it just comes downwards, right? This right here will basically indicate that there's going to be a reversal in direction, right? Not a reversal in trend, because the trend's already, it's still coming downwards. If you look at the higher time frame, it's still coming downwards, but there's going to be a reversal in direction, which would probably happen around here. Now, the market is closed, so we can't really trade it, but with this happening right here, you would see a double top happening, and the market will most likely break downwards. And that's how simple it is to use a Fibonacci. I'm going to basically show a quick example of how I use it trading NAS 100, right? Scroll here and then go into the 1 minute time frame. So I use this in the 1 minute time frame due to the fact that this moves so quick. So right here, with the market coming down, let's say if you were to draw from this point to this point, right? And we'll zoom in a lot. If you were to use it from that point to that point, you would see that the market retraces off the 0.38 level, and then you could enter in for a sell. You would enter in for the sell right when you see a strong red candle form, then the market breaks downwards, right? And then from the market breaking downwards of it coming up, you would basically draw this same thing, not from up here, but from this point on to this point, right? And then here you could see that the market retraced off the 0.61 to 0.50, continuing to go downwards. And this is basically how I use a Fibonacci trading NAS. I just drive from one point to the other point. In this situation, I would drive from here to here. Look at the retracement happening here, right? And it continues its upward trend. Then I would wait for the first pullback down. When the first pullback happens, I would drive from this point to this point. Why this point? Because the reason I would drive from this point is because it did not create, it created like a lower low. So basically higher high, higher low, higher high, higher low, higher high, higher low, right? And you would drive from your higher low to your higher high, right? And pretty much as soon as it retraces, you would capitalize on it. So this was a very quick and detailed explanation of how to use Fibonacci's on an ongoing trend. It's a very simple indicator. It's a very simple tool to use alongside other indicators for a higher probability setup.